Okay, we're going to go through case study number 2. This is the courtyards. This is technically a 30 unit that we turned into a 31 unit. And this is also in Kansas City, but I wanted to show you because these are the first few smaller deals we did that were in that kind of 10 to 50 unit space. Okay, and ideally for someone that has never done this before and you're coming brand new, I don't want you in the duplex and fourplex and triplex space. That's residential still. I need you north of 5 units, and if we're really gonna start to make the economies of scale work, really kind of 8 to 15 is ideal, depending on the market you're in. If you're in kind of a Midwest market, then I would say even go up to what we did here, 20, 25, 30 units. Because your money, your price per unit, price per door as they call it, is gonna go a lot farther. You're gonna spend the same amount of money if you were, say, in Phoenix or parts of Arizona, West Coast or East Coast stuff for a 10 unit than you would in the Midwest for a 20 or 30 unit. Okay, that's the point I'm trying to make. So the courtyards, great little product, gated little community. This was a home run deal. This was a home run deal. And the reason it was a home run deal was because I don't think the seller knew what they had. I don't think the broker representing the seller truly understood it because he was a residential broker. This goes to show you, like, you gotta know your stuff. The location was incredible. We knew what was coming. Our property management company, just to kind of show you, our property management company, like, this thing came on the market. Our broker went over same day. We walked the property. I was on FaceTime walking the property with Jason and a few other folks. Our property manager, who's also an investor, is literally walking off the property after he toured it as we were walking on the property to tour it. And so we started laughing and we said, hey, dude, let's not fight each other. Let's do this thing together. Partnerships. I keep talking about this word partnerships. Partnerships. Because not only, and why this is so key, not only is he a good property manager, now he's going to be an investor, and he also has access to the construction crews additionally. Now he's highly vested in making sure we keep the costs low, revenue high, and move this deal through. Okay? The courtyards in Kansas City. So to kind of show you, taking an old property and moving it, right? So we went from, something like this, where it's just old and dilapidated, 1960s, 1970s, and we came in here and remodeled the interiors, right? Did about 12 to 14,000 a unit, okay? This was a heavier remodel, but we got the money out of it. I'm going to explain why. And we had the bandwidth to do it. Nice bathroom remodels, okay? And then the kitchen remodels as well, okay? Went with a little tile backsplash, shaker cabinets, stainless steel. We did a granite countertop undermount sink, gooseneck faucets. Did a little LVT vinyl flooring. Bada bing, bada boom. And we kind of teach you a lot of this stuff, okay? So going through some of the investment highlights, same thing location-wise, Kansas City, Missouri, okay? Going through what you saw kind of in the last little case study, we used this little pitch deck to go through some of the important items for the employment, the rent growth, and supply and demand, all in good sectors, okay? When we kind of evaluate. Okay, so yeah, talking about the Kansas City metropolitan area, we go back to the same things we look at: jobs, population growth, rent drivers, okay? And when they all kind of align, when you see jobs coming in, the unemployment rate was 4.2%. They have a lot of colleges, universities, and stuff in place. So these are all the things you like to see. Path of progress with the light rail system. All of these things that we kind of saw from a 10,000 foot level that you can get by using some of the data sites and everything that we give you as part of the mentorship. We give you all the sites that we use to do some of this research. And most of them are free. So that way you're not having to recreate the wheel. We give it all to you. Just go follow it and we teach you and hold your hand while you do it, okay? Rent growth, right? But that's all driven by, of course, jobs and population, because the population is going to follow the jobs, and when all that happens, then it dynamically pushes rents, right, vertically. So all of that. Here are your demand drivers for mainly the employer base in that area. So a lot of the major medical is in there, university towns, all of that, the schools, main grocers, Walgreens, the YMCA, a lot of headquarters and stuff are in Kansas City. They had, I think, 5 or 6 Fortune 500 companies. So a lot of demand growth. Cistern, I think it's called Cistern, is a big medical supply company. So they're massive campus and headquarters in Kansas City. Okay, So this property is a little south of our other one that we did in the area. So the main area of kind of like they call it the plaza's up here, and then you come right down a little bit further, a few miles, and then you run into this area of I should say west of Troost. We tried to name this thing, I think, a different name at the time. I'm trying to remember what it was. But you have the medical university here, a lot of big employers. I'm trying to think of this little neighborhood. Forget what the name of it's called. But a cool little vibey town neighborhood, like very trendy, a little bit of hippie-ish, but a lot of young professionals and stuff like that, very up and coming, cool coffee shops and things like that when you drive through this kind of part of town here. And then you have the main district here, the university system, main driver there, and then the plaza, which is kind of the ritzy area, and then a lot of big employers and stuff sitting over in this area. So all pretty centrally located, good urban drivers, as they say. So let's look at the financial highlights on the property so you can kind of understand how that worked out. If I can bring this up a bit. So we got a screaming deal on this property because the broker didn't know what they had and the seller didn't know what they had. They sold this thing too cheap. Their problem, not ours. We bought this thing for $1.5 million, okay? $1.5 million. And it was 30 units. We turned it into 31. We found an extra unit that we could do that to and just split. And it was an extra, it's like a super large 2-bedroom that we could split off and make 2 1-bedrooms and actually increase the NOI better. So we only had to come in with about $520,000 in cash investment into the deal, okay? So when you kind of break that down, we had a $1.5 million loan, give or take, when we came in. When we renovated this thing, pushed it up, and when we were at a stabilized cap rate, we were at over 11% on the cap, and we could sell this thing at probably a 5 to 5.5 cap today. So when you're looking at, valuations on something, we bought this deal for, let's go to the next screen, actually. We'll just zoom up on this guy so that way we can do this. All right. So we bought it for $1.5 million. Today it's probably, I think we had it valued at 3.625 recently. Okay? So more than 2x, right? Almost 2.5x. And we had $500,000 in the deal. Okay? Of which we, as the general partner, we brought in $75K, a little more than 10%. The rest was brought in by our limited partners, our other investors in the deal. And that's what we brought in. So we refinanced this deal not too long ago, okay, got all of our money back. Then we got an X on the money of, I think, 2X on top of that, plus we're getting all the quarterly distributions. I mean, this thing is an absolute home run. I mean, our returns on this thing are like 9,000%. I'm not kidding. Like, it's stupid, but you're not going to get this. This was a rare scenario, the rare situation. But I wanted to kind of walk through how this thing would structure. So once again, bought it for $1.5 million, brought in $520,000. Of that $520,000, we brought in $75,000 of our own money, raised the rest, 400 and something thousand from investors. And that's how we brought that one down. Got a commercial loan from a local commercial bank within the Kansas City market and have done well with it. We renovated it, raised the rents, stabilized it, refinanced it within 2 years into fixed rate debt that's long term. And we will sit tight. We may exit the deal next year, but we're sitting at a hefty valuation and a nice profit to do so. And that's this particular deal. So great example of a good case study. Okay. Let me see if I can touch on some other little financial highlights here. Once again, this is a pitch deck template that you're going to get, that would show all the financials on the property, all of that stuff, investment vitals, all these things that investors are going to want to look at. Investors get their own portal to log in and check their investment, et cetera, et cetera. And then it goes into us. Gosh, we looked young, handsome lads. But yeah, great property. This was a great case study of how it kind of came about, how we got it. Once again, local contacts, the more hands you shake, the more money you make. and they found this deal for us. And but that was by building the relationships. But it started with on market. This was an on market deal, and then we got to start to find some off market stuff after this. We start with the on to get to the off, and we teach you that stuff through the mentorship and how to do it, how to execute. So hope this makes sense. Let's go on to the next case study.